afternoon, and welcome to the Next Gen Planners Big T Conference. Was that the right intro, Dad?
It was. In the background, I can see you dancing to the music as well. It's every time I can see you dancing to the music. Fantastic. Welcome, everyone. My name is Dan Graham.
And I'm Francois. I almost forgot who I am. And we are here every day during conference week to bring you insights from amazing people in financial planning.
Yeah, so first of all, sorry we're late. We've been doing the conference all day today. Many of you guys will have been at the conference today, so of course you'll understand why we're running over. But apologies to everyone who was waiting for us to get started there. But thank you so much for joining us, everyone, for this week's series of special shows as part of the Global Financial Planning Conference 2022. Today's big topic is 21st century investing, and we'd love to hear what you have to say on that topic in the comments and the live chat.
Yeah, and on the show this afternoon, we have three awesome guests. First up, we've got Carey from Timeline. We have a fantastic interview with Mollie Thornton from Parmenion. And we have Gavin Brown from Winterbar to chat about crypto. Righty, so let's get right into the show with our first guest, who is Ed from Timeline. And Ed, a warm welcome to you this afternoon.
Hey guys, thank you. Very pleased to be here. Can I just say congratulations? What an amazing event! Logistical planning at its best, and very well done to you all.
Thank you very much, mate. Logistical planning usually means you turn up on time, but we're 15 minutes late. But we appreciate the compliments, anyways. Thank you very much for joining us today. So you guys at Timeline are one of our amazing sponsors at the Mega Conference this year. Thank you so much for the support. As I mentioned in the conference today, we couldn't put it on and we couldn't have our amazing speakers without the support that our sponsors give us. So we really appreciate that. What was it about the Mega Conference that made you guys want to get involved this year?
We love what you guys do, first and foremost, but particularly the dynamism of this conference is really interesting. You're gathering lots of really interesting people across the industry to cover lots and lots of really interesting subjects, and that isn't easy. But the way you've done it, we think is fantastic. Live podcasts, collaborative presentations. I think there's even a Dragon's Den pitch at some stage. I mean, what is not to love about that? It's really interesting, and it's a pleasure to be involved.
Awesome. So today's topic is 21st century investing, and Timeline is a great app for helping clients visualize their future. How do you think the investment space will look in the 21st century going forward?
I think in the 21st century, we're going to see a lot of pressure on costs, particularly in the platform market and especially in the investment solutions market. We think costs are going to come down dramatically, and we expect technology to play a bigger part of the delivery advice. I'm sure you'll have a session on this, or it'll be covered at some point, but we've got a big advice gap. 8% or something like that people can access advice. That's a really worrying number, and as an industry we've got to fix that, right? So technology's got to play a huge part in the evolution of advice, and we need to kind of think about technology to reduce the cost of investing and the cost of delivering advice, and that's what we're trying to do here at Timeline. We've combined planning and low cost investment to try and help people retire with confidence. And yeah, it's that's I guess the key trends that we're going to see.
Absolutely, yeah. And I think you mentioned that technology and technology at the moment, for instance, can be really helpful because it's a bit of a crazy world out there at the moment. We've been talking about this at the conference for the past few days. It seems like at the moment, all these things we've been talking about for years are actually happening, and it's a very, very kind of congested, confusing world out there, and especially in the economic environment. I mean, with things like crypto and things like that falling in the news, and then we've got the markets going a bit haywire at the moment as well. But how do you think that technology, just like Timeline, can help clients of financial planners get through these kind of times at the moment?
Great question, Dan. I think history teaches us that things, they don't move in straight lines. The market movements are erratic, they're unpredictable, and understandably, that's going to cause client anxiety. There was a recent client survey that I read, which indicated that the number one question a client is seeking answers to from their advisor is this: am I going to be okay? Can I retire with confidence? Have I got enough money to fulfill my hopes and dreams and things like that? So what we do, there's different models out there, but at Timeline, we stress test client portfolios against historical asset prices. And by doing so, you can kind of discuss with the client what their portfolio would do if we went through another oil crisis, another world war, another global pandemic. So nobody can predict what the world's going to happen in the future, but using real historical events, the advisors can coach clients that markets do recover, irrespective of political climate, macro events, markets recover over time. And our advisors who use Timeline say that's really powerful. It helps them simplify difficult concepts and kind of by doing so demonstrate their value.
Yeah, and that's a hard thing to do sometimes, is to demonstrate your value. And I want to go back a little bit to your comment around the advice cap or the access to that, where you say it's at 8%, and it's quite a worrying percentage, absolutely. And it's not much different in South Africa. I think it's a global problem. But I mean, if we think about financial planning as a profession, which I absolutely deeply believe it is, how do you think we can close the advice gap and make financial planning more accessible?
I think again, it's back to technology. It's about technology which will drive efficiencies in actually delivering advice. And allow advisors to create different service propositions. The industry's kind of fixated on basis points and only certain clients with a certain value will generate sufficient revenue. So that's why they're interesting. I think we need to try and think and move away from that, because not everybody have got those assets today. So perhaps looking at different pricing models, which is underpinned by really efficient tech processes. If a client's prepared to pay, I don't know, £70 a month to go to the gym, or £10 a month for Netflix, why not pay X pounds a month to get financially fit? The opportunity here is massive, and I think technology will play a massive part in that.
Yeah, it's definitely a massive enabler. I can't agree more. So Ed, thank you very much. That wraps up our time with you this afternoon. Thank you so much for coming on and for being a valued sponsor. We deeply appreciate it. Thank you.
My pleasure, guys. Wishing you the best of luck.
Thank you very much. Alrighty, so next up we have an interview with Mollie Thornton from Parmenion. Let's have a look.
How are you doing? Good afternoon.
Yeah, really great. Thanks, Dan. Yeah, how are you?
I'm fine, thank you. I'm all good. It's really nice to have you here. And of course, you are from Parmenion, and you guys are one of our sponsors this year for the first time. So it's really, really good to have you on board. Can you just tell us, very, very quickly in a quick summary, what it is about the mega conference that made you guys choose to sponsor us this year?
Yeah, sure. No, thanks so much for having me. It's great to work with you guys. Next Gen planners are great, and we, really impressed by everything you do. I think it's just really nice opportunity to work together on this one. And I was looking at your core values about education and the technology and infrastructure piece, and also the reducing inequality. And I think that's really close to our hearts as well. We like doing these sorts of events with power planners to try and help, if we can, give a bit of education on different things, as well as trying to be that kind of quite clear and simple, and hopefully demystify some of the investment jargon to try and make it accessible for everyone. So.
Fantastic. Well, it's lovely to have you on board, and we can't thank you enough, because the speakers would not be able to be as amazing as they are at the conference without the sponsorship that they get from you guys. So we really appreciate it. Thank you so much. So today's big topic that we're talking about on the show is 21st century investing. And on the face of it, that doesn't sound like too interesting, but then when you actually look at the kind of individual elements of that, it is actually really, really intriguing. But from your perspective, what do you think it is that will dominate the investment space in the 21st century?
Yeah, well, it's a fantastic question, but it's a huge topic. And I think obviously we're already 22 years into the 21st century, and loads has changed. So if you don't mind, I was just going to talk about sort of next 7 or 8 years to 2030. I think that's a really exciting time. And there's two big mega trends I think that I wanted to touch on. The first one is just increasing uncertainty. So we've started 2022 with rising inflation, central banks looking to increase interest rates, and the awful situation with the Russian invasion of Ukraine. So we are seeing increasing uncertainty in markets and a bit of volatility. In Parmenion, we're all about risk management, and risk is really central to everything we do. So the best toolkit we've got to manage this situation is diversification. All our risk-graded portfolios invest in multi-asset and lots of funds. So we're investing across cash. We've got government bonds and corporate bonds, equity across all different sectors, regions, companies, styles. And also we've got alternatives in portfolios. So we've been long-term investors in property, which is a fantastic diversifier. More recently, we've been broadening that out. We see good opportunities in infrastructure and absolute return as well. I think with the current backdrop, we're seeing increasingly a bit of dispersion in markets, different regions, different companies performing quite differently at different times. So we think by diversifying and having broad exposure, we're well positioned to kind of weather that and, perform in a consistent way over the long term for our clients. So that was the first thing. The second one is sustainability, and I know we're going to be talking about that, but that's really a huge mega trend and something that I'm really passionate about. And the reason I kind of homed in on the next few years to 2030 is that there's a few big goals coming up. So firstly, if we're going to be able to achieve the Paris Climate Agreement and limit global warming to well below 2 degrees, globally we need to halve our carbon emissions by 2030. So that's going to require huge shifts, decarbonising our energy systems, reducing and reversing deforestation, people changing the way they travel, the way they eat, the way they work. And the other goals that are coming up in 2030 is the United Nations Sustainable Development Goals. So I'm sure you might have heard of those. The United Nations set these 17 goals back in 2015. And it's really really broad across sustainability. So it's things like no poverty, no hunger, but also trying to tackle climate change and protect life on land and life underwater, for example. And those are due to be achieved by 2030. But unfortunately, the scale of the challenge is quite big. So that's going to require at least, it's estimated $5 trillion a year of investment. So big challenges, but big opportunities for investors to, access some of these trends.
Yeah, it's interesting how it's all kind of linked together as well, because you're exactly right that it's like the instability of today. I mean, growing up, I never really had any instability in the world. And then it's just weird for the past few years, it's all just kind of just sort of happened at once. It's like waiting for a bus, they all come at once. And it's weird how, well, it's not weird at all, but it's interesting how it's linked. That sustainability piece is linked to the instability in the world. And we're only going to create more instability if that sustainability is not linked to that as well. And it's not targeted. And you mentioned, I mean, ESG investing, we can't really talk about 21st century investing without that. And I always say, I mean, people say ESG investing, when in reality, they refer to the kind of overall overarching thing. We say ESG because it's really one of the first things that actually worked in that area. Whereas we know that it's just one part of green investing. So there's, impact investing, which is at the dark green end. And then there's, other, like SRI investing, for instance, which is at the light green end of the spectrum. But which of those kind of areas on the spectrum of capital are you most excited about at the moment?
Yeah, no, that's a great question. And we're really lucky at Parmenion. We've had a sort of ethical and sustainable investment solution going back 10 years. So we've been doing this a long time, and we've seen the kind of industry growing and, really becoming mainstream, as you say. I think for me, sustainable investing is really interesting at the moment. And, that is what we mean by that is investing in companies who either are operating in a really sustainable way. So, they're managing their carbon footprint, they're looking after their staff and their customers and their supply chains, or they might be actually providing solutions to tackle environmental or social problems. So that's a really broad area. I think traditionally it's kind of, people might think, oh, that's wind turbines, isn't it? Or that's solar panels. And yes, you can invest in those areas, and renewable energy is a big part of it, but it is a lot broader now. So, there's various solutions across, for example, electric vehicles and decarbonising transport systems. There's making buildings more energy efficient. There's plant-based meats and healthier diets. And then from the social angle, you've got things like healthcare, education, financial inclusion. So I think what I find fascinating is the breadth and depth of opportunities now, which we see, which really helps us build extremely well diversified, risk managed portfolios, but we don't have to compromise on the sustainability either. And there's so many new fund launches out that space that gives us an incredibly rich opportunity set to really pick the leading funds to put into our portfolios.
I can tell that you could talk about this all day. I could as well, and it's a bit of a shame that we've only got 10 minutes.
Yes, try and cram it in.
The next question in itself could in reality be a whole podcast episode, and that question that I've just asked there could be a whole long form podcast episode with loads of conversation, so it's hard to cram it into 10 minutes. But the next one is probably one of the biggest things that I see people asking nowadays, which is this kind of this debate whether you should engage with your investments through things like voting rights and all those kind of areas where you can actually engage with your investments to make a change and positive change with the companies that you're invested in, or just to simply divest from the ones that aren't doing what you want them to do. So, for instance, working towards the UN SDGs and things like that. It's a massive question, and I feel really terrible for putting you on the spot about this, like in such a short time. But what's your opinion on which one do you think is not only better, but which one do you think is going to be the most popular going forward?
Yes, and it's a really fascinating topic. So I'll try and keep it brief. But as you say, when you buy shares in a company, you get voting rights. But even if you're investing in bonds as well as shares, you're effectively providing capital to a company. So it's an opportunity for the fund manager to, build a relationship with that company, give them feedback, and over time, I guess, look to influence and guide them. So, for example, a lot of our fund managers are working with their investee companies on net zero carbon emissions targets at the moment. That's quite a big area of work going on. And I think, as a house in Parmenion, we don't necessarily have a view. So in our ethical solution, at one end, we've got our responsibility leaders profile, which is all about engagement and voting. We want to be investing in leading fund managers who we see have got the most experience and the biggest teams to, be able to demonstrably work with companies and then show evidence of that positive progress. So, it's fund managers like Hermes, Royal London, Saracen that we view as really leading on that. But we know that some clients have much more of a kind of more traditional ethical approach. And so we've got a profile that's a bit more strict on that end. And that's where the fund managers are really looking at companies and their supply chains to look at all their exposures. And, if a client might not want exposure to gambling or non-medical animal testing or environmental damage, that can be screened out. And I think the industry is sort of moving a bit more from that ethical approach more to the engagement approach. I think, still most people don't want to invest in tobacco and arms, so they're often cut out. But I think for most companies are somewhere in the middle. They might be doing lots of good things, but they'll have parts of their business that are a bit more polluting, or maybe, some of their policies that aren't as good. And for me personally, I think, we need to bring everyone with us on this sustainability journey. So I think engaging initially is always, a good option to try and improve behaviours if you can. But, speaking to our fund managers, we do monitor this quite closely. And there are occasions where companies, just don't want to listen, or they're not receptive, or maybe they're not moving quickly enough. So a classic example there is some of the oil majors. They might be moving into more renewable energy, but they're still putting a lot of their capital expenditure budgets into fossil fuels. So, at some point our fund managers might run out of patience, and, some of them have sold out, of those companies, for example. So it's always about a balance. And I think we try and cater for different client views on that spectrum, but I'm a bit more on the engagement side.
Fantastic. There we go. You've answered it in 2 minutes.
Fab.
Well, that's all we've got time for today, Mollie. But if people want to connect with you, what's the best place for them to do that?
Yeah, so I'm on LinkedIn, so you can find me on there. We've also got our Parmenion website where you can find all our sort of thought pieces and different collateral for our solutions. So yeah, please do get in touch. I'd love to speak to you.
Brilliant. Well, thank you so much for that fantastic interview this afternoon. And thank you to Parmenion as well for their sponsorship this year. We couldn't do it without them. But that's been Mollie Thornton from Parmenion. Thanks, Mollie.
Thanks so much. Bye.
God, I am absolutely worn out with all the amazing stuff that we've heard this week. That was absolutely fantastic from Mollie, and some really good points. And she's just a lovely person as well. So it's nice to chat to Mollie. Who do we have next? We've got this should be really good. Francois, I'm going to leave you in the backstage for now, and I'll introduce this one. So a few months ago, we got introduced to the guys at Winterbar Associates, and one of the people who work at that team is Gavin Brown from the University of Liverpool. And we really couldn't talk about the 21st century of investing without covering the topic which has been on not everyone's, but a lot of people's lips over the last few weeks, which is cryptocurrency. And I know that a lot of people in the audience get asked about this by their clients quite often. So what we thought we'd do was we'd get a really sensible opinion on cryptocurrency from someone who actually knows what they're talking about. So we've got Gavin Brown from the University of Liverpool. Hi, Gavin. How's things?
Yeah, really good. How are you?
I'm fine, thank you, mate. Thank you very, very much for joining us this afternoon in your busy schedule of everything that you've got going on. As we've already mentioned in the show, today's big topic is 21st century investing, and something which is in the news at the moment, and is something which has grown massively over the past few years, are crypto assets. And I don't think we could have got through a show on 21st century investing really without talking about something which has dominated the space for the last few years.
Yeah.
But how likely it is do you think that crypto assets will rise in popularity and perhaps even dominate the 21st century of investing?
Yeah, I think it's a reasonable hypothesis. I don't think I'd ever go as far as dominate. I think dominate would suggest that it might start to crowd out, sort of fiat currency, the sort of currencies that we're used to using day to day. At the moment, all cryptocurrencies are approximately about 1,000 times smaller in market capitalization compared to traditional money. So they're still quite small. I do think they will expand. I do think they will continue to grow. But I don't think they will necessarily come to dominate by majority. But that doesn't mean to say they're not necessarily the sort of thing you might want to consider an allocation to in your existing portfolio.
Yeah, absolutely. I think that sounds like Microsoft you've got going up on your computer.
Is that me? Do you want me to?
I think so. Yeah, it's okay. It's fine. It's quite a nice tune anyway, so we can go to the show with that. Okay, so crypto assets. We've been doing some research on this recently, and you've actually just informed us that they're worth more than $1.3 trillion.
That's right.
And the trend was going up until the past couple of weeks, obviously, but there's certainly a trend in people not only buying them, but kind of using them as currency and stuff like that as well. But a big factor in this, what we see often, is hype. And that's what a lot of people put this down as, is hype. To what extent do you think hype is a factor in that kind of upgoing trend?
Yeah, I think hype is definitely a factor. There's a principle in academia around hype and hype cycles, and they often talk when discussing technology, not just crypto, but any type of technology innovation. We tend to overhype the short term, but underhype the long term. I would argue that we're now moved from that short term into that long term piece, and there's plenty of evidence around. If you want to crypto bash and talk about the negatives, there's a lot there for you to go at. Be that the inefficiencies, the capacity to host a certain number of transactions, the unregulated nature, the volatility, the carbon footprint. There's a whole host of different negatives in there, many of which we'll get onto. But I think fundamentally, when you step back from it, cryptocurrency does allow you to be your own bank. It does allow you to perform financial service activities without an intermediary, and it works. And I think when you take that in the round and you look at that in aggregate, that really is a game changer. That's a game changer in terms of money and monetary systems. And therefore, for my money, if you'll excuse the pun, I do think they will play an even bigger part in the sort of 21st century investing landscape. And that's why it is not necessarily a sensible bet to make, but certainly one that I would advise anyone really to sort of consider an allocation to in their portfolio.
Yeah, it's interesting, isn't it? Because the currency part of cryptocurrency is often kind of forgotten about a little bit. Like, people don't really, the hype isn't around using it as an unregulated currency for most people. It's the growth in potential investment returns, which, as we all know, is volatile and ridiculously risky and things like that. But the currency side and the kind of possibilities with that don't really get talked about as much. I think, well, maybe you see it, but I don't see that get talked about as much.
Yeah, no, you're spot on there. And I think most people do purchase them as a speculative asset. They're not necessarily buying them for a utility, to act as a form of currency. And this is one of the reasons why, the FCA, HMRC, the Treasury, many international bodies as well, do not even call them cryptocurrency. They call them crypto assets. But even that, terminology is up for debate, right? So, you know, if we can't even agree what to call it, then how on earth can we appraise its investability or not? So there's a lot to chat around in that regard. But as I said, it's such a complex and kind of nuanced area as well that it often becomes a labor of love to get under the skin and acquire sufficient knowledge even to be able to make a considered investment. So there's plenty of barriers there, but also plenty of gains and opportunities for anyone who's willing to put the time in potentially to research it properly.
Yeah, I think as well, we're kind of seeing that market innovation kind of curve as well, where there's people who are innovators and early adopters and late adopters and laggards and all that kind of stuff. It's exactly the same when it comes to this kind of new investing as well. There's people who buy into the hype at the very beginning, and then there's people who wait for it to trend up a little bit. And
yeah,
you know,
I mean, if we just look at the latest numbers, the FCA released a report in June of last year. That's the Financial Conduct Authority, obviously the regulator here in the UK, and they were estimating somewhere between 2 to 4 million people in the UK have owned or used cryptocurrency. That's adults. So clearly it's a minority of people, but it's still a significant minority. So it's when you talk about that S-shaped curve of diffusion, that diffusion of innovation, we're probably past those early adopters. We're not quite into the mainstream yet, but we are kind of potentially at that tipping point where, if you're at a dinner or in a cafe or in a pub, and you're with a group of people, the chances are someone does crypto, so to speak, or they certainly know of someone who does. So it's becoming a little bit more accepted, I guess, in that way. It's
true. Like when I go to the pub or something like that, I always hear people talking about it. And if it was still at that early innovator stage, it probably wouldn't be like that, would it? So yeah. Okay, so it's been in the news, as you obviously know, because you've had people calling you about it. It's been in the news a lot recently, especially with the fall of Luna, which is a cryptocurrency, which I mean pretty much was non-existent over the course of a few days, and also the general fall of the crypto market. Like we've mentioned there, that it's worth over $1.3 trillion now. It was worth over $3 trillion at its height. It's a bit kind of confusing to get our heads around this when we're used to thinking of traditional investing, where we tell people not to worry because the market goes through cycles. So do you think that we're seeing a market cycle here, or is there something else at play which has caused the drop, do you think?
Yeah, I think it's probably a bit of both. I mean, crypto wouldn't be crypto without the wild lows mixed in with the wild highs. So you're right. A lot of people do just kind of put the seatbelt on and take that 5 to 10 year time horizon and just accept these market fluctuations. But that's easier said than done. If you're sat there within a set of institutional AUM, or you're advising a client who's just lost 40% of their NAV inside 7 days, then there's big questions that need answering. I would suggest that much of this has come out from an infrastructural deficiency or weakness in the system, and that was around stable coins, in particular privately owned and controlled stable coins. So stable coins were the safe haven of cryptocurrency. So in a similar way that during market volatility, we have a flight to quality towards gold in traditional markets, people will move out of fixed income and equities, etc., and move into gold to take sort of sanctuary. The stable coins were used in a similar way in the crypto land. And the problem is that there was one particular stable coin in this instance, which effectively was attacked, or at least it's alleged that it was attacked. And in doing so, it forced the stable coin, which was algorithmically controlled, to rebalance its collateralized assets. And in doing so, that not only weakened the stable coin, but it also spread market panic, because we saw huge swathes of sell orders for Bitcoin coming through the system. And even though the market cap is quite high, the actual relative liquidity, in other words, the trading volume on the order books, can be comparatively thin. So it doesn't take a huge market action to actually chew through that order book, which then induces even more volatility than we're used to seeing. And very quickly that can spread panic. So a lot of people talking about it akin to a bank run or something similar has effectively happened in crypto. If you want to look on the positive though, Bitcoin seems to have come out the other end. It's now starting to rise slightly. It's up 3% in the last 24 hours. It's now ticking at a price just above $30,000. So it appears to have withstood that storm. And don't forget, it's done all of that without being regulated, without being backed, and without being endorsed by any nation state or institution. So the flag's still flying and lots still happening.
That's interesting you mentioned there about the unregulated bit, because crypto assets are still unregulated by the FCA, obviously. And they literally put this in their own words, they're considered very high risk and speculative. So it makes it difficult for financial planners, especially because there's not any real guidance from the regulator on how to talk about this to your clients. I mean, our regulator is so-called proactive, proactive, where they don't tell you how to do something, they just tell you some guidance on how to do it. But there's been no guidance about how to do crypto assets. What do you think is a good way for financial planners to, so if, for instance, clients ask them about crypto assets, what do you think is like a sensible way to kind of educate them about them a little bit?
Yeah. Well, I think the first thing to do as anyone who works in finance, this is now an asset class in its own right. And I think anyone who works in the financial services industry needs to be able to talk with some level of expertise around any asset class, be that alternatives, real estate, REITs, fixed income, equities. You'd expect to be able to answer certain questions about those markets. I believe that same expectation is now there for digital assets. I think you don't have to be a world leading expert, but there would be an expectation that you might know the leading 10 to 20 currencies. You might have an understanding of the regulatory environment, the key risks and rewards, what's happening internationally, and also keep up to date with the pricing. So I think there's a knowledge gap which might be there for some people, and I say might, it's not. Some people are clearly very into this space, and perhaps arguably too into this space. There's a lot of people who spend all their time in this space and nowhere else. So it's about having that balance and having that knowledge. I think the second thing is to recognize that they are incredibly risky. There is a lot of volatility in there. And even then, many people are still willing to take levered positions in this market. You can have 100 times leverage on some crypto positions. So, even if cryptocurrency wasn't volatile and risky enough, a lot of people continue to turn that dial up. Again, that might be appropriate, but you need to do the standard risk evaluation of your client. You need to be looking at obviously willingness and ability to take risk, to think about their overall risk appetite, not least their age, their general commitments, all the usual things. So it doesn't mean to say that cryptocurrency is always a definite no or a definite yes. Still keep those same rigors of control in terms of how we evaluate it. But in my experience, cryptocurrency isn't for everyone. And for people it is for, we tend to maybe think about an allocation of sort of 2 to 3% maximum, rather than a huge percentage allocation of your overall portfolio.
Brilliant. Very sensible. Yeah, really good. I mean, it's nice to have a conversation with someone who is so kind of resolute about this and also kind of reasonable about it.
I'm an accountant, you see, so I'm always prudent,
So we see, but like you see crypto bros and stuff like that online. Whenever we hashtag crypto on our like LinkedIn, when we're just talking about cryptocurrency in one way, we get loads of people trying to offer us NFTs and all that kind of stuff. And it's a noisy, it's a weird world. So it's lovely to have someone on who talks so sensibly about it. And that's why we've got you on the show today.
Thank you.
So thank you so much, Gavin. It's been a pleasure chatting with you as always. What's the best place for people to connect with? I know you're a very, very busy man, but if they're just going to connect with you, what's the best place for them to do that?
Yeah, probably. I mean, LinkedIn and Twitter are the two key places, but LinkedIn is my zone really. So if you just search Gavin Brown, University of Liverpool, and you should find my smiling face looking back at you.
Brilliant. Thank you so much, Gavin. It's been a pleasure chatting with you this afternoon. I'll let you get back to your busy day, but thank you for joining us and we'll see you soon.
Cheers, Dan. Take care, everyone. Bye-bye.
There we go. How was that?
That was awesome. Every time I hear something about crypto, I learn a little bit more and I understand a little bit more. But yeah, what a landscape, eh?
I think the most important thing in there was when he was talking about the difference between like traditional investing and crypto investing and how to kind of see the market downturns and what that actually means. And that was a bit that was really confusing in my head for a while. And I just asked him about it and he was really clear. And as I said in there, it's nice to hear someone talk so sensibly about it because like I said, I mean, you probably see this as well, Francois, about all the crypto bros and all those kind of people out there who are, either 100% crypto or they're absolutely against it. And there's no kind of middle ground. And it's just like everything, there's no kind of middle ground in a lot of areas. But yeah, it was good to have him on and talk about it. So.
Absolutely. He explains it in such a layman's way also, like it was easy to follow. So absolutely brilliant.
Yeah, it was, yeah. Well, that is it for today's show. We're ridiculously late and we're ridiculously over time, but it's still been nice doing this show anyway. So thank you to everyone for watching. We'll be back tomorrow morning with The Big Breakfast, and tomorrow's big topic is digital client engagement. And on tomorrow's Big Tea, which is in the afternoon, on the same topic, we've got someone who won The Apprentice in the UK. She will be a fantastic guest, and we're all very much looking forward to seeing her. But Francois, this is the last day that you'll be a presenter on The Big Breakfast and Big Tea. Yep. How's this week been for you? You feeling inspired?
Yeah, absolutely. No, I just want to go now and go do some awesome stuff. It's been, I want to say a roller coaster. And if I do say a roller coaster in a in a very good way. It was just an amazing experience, and thanks Dan and everybody else at NextGen and all of that, and to be involved with this is an absolute pleasure.
Thank you so much. Thank you for being a wonderful host, co-host. I know you do this all the time, but you really have been excellent over the past couple of days. And we'll be joined by our host, Amanda, again for tomorrow's shows. So it'd be nice to have her back as well. But thank you so much to everyone for joining us. Again, sorry we were a bit late. We hope you enjoyed the conference today. If you saw that, have a wonderful evening. Go and enjoy yourselves. And we'll see you all very, very soon. Bye-bye.